Hello, everyone. I hope you had a great Diwali celebration. Unfortunately, markets did not had a great Diwali. Markets were correcting, and October has been one of the worst markets for the Indian investors. I'm sure you're concerned about your portfolio, and there's so much of noise in the market right now that decision making becomes difficult. To make your life easier, what I have done is I have shortlisted five charts, five must see charts, which can help you in maximizing your portfolio and investments. So, watch these charts and take decisions accordingly. I'm sharing a presentation which has these five charts. We won't take a lot of time. We'll quickly explain you these five important charts for maximizing the profit. First, we have a big US election date tomorrow, that is 5th of November. There's a very tough competition between Trump and Harris. Trump represents Republicans and Harris represents Democrats. It's a very close fight, but there are betting sites in US which are legal, which gives us good data to analyze who is going to win. Now, if you look at this chart, as per Polymarket and also Kalsi, Trump is going to lead, but if you look at the predicted, Harris seems to be winning. Few weeks back, Trump had a very good gap with Harris. He was on a very good lead, but last few days the gap has come down. So it's going to be a tough fight. So watch the US elections because this is one big event which affects the global markets. So this is chart one and an important event. Coming to chart two, the second question which will be coming to your mind is that who is going to win and how are they going to affect the market? Now, I personally feel that Trump is going to win the elections, but we don't know because the fight is very close. Now, if we look at the choice, if we look at how they're going to affect the markets, if Harris wins the election, I think it will be a status quo because currently Democrats, which earlier followed the policy of Biden, is what will be continued. So I think there will be a status quo. The policies will continue. If Harris wins, we feel that the emerging markets, especially Indian markets, will do well. Interest rates will start coming down. The US dollar will weaken and emerging market currencies will also strengthen. So this is what I think the win of Harris is going to play out. Not Trump. Trump, it's going to be difficult to predict because he himself is very highly unpredictable. But one thing is for sure that if Trump comes, he's going to bring big changes in the market, big changes in the policy and in the decision making. Now, there's a possibility that if Trump wins, the long term bonds will go up, the long term interest rates will go up, but he will also make the Fed cut the short term interest rates. US market is expected to do well if Trump comes back, and crypto may also do well because Trump is a big fan of crypto. So you have to watch who is going to win the elections. Third chart, very important chart, and I feel this is one big reason why market has been correcting in India and FIs have been pulling out of Indian markets. Now you look at this chart, this is a chart of US bond yields, 10-year US bond yields. Now in July, the 10-year US bond yield was around 4.5%, and market was expecting a Fed rate cut because inflation in US has come down. Now, 10-year bond yield fell from 4.5% to 3.6% before the Fed had cut the rate. So there was a clear correction of 90 bips or 0.9%. But surprisingly, after the Fed rate cut, the interest rates have gone up significantly to the tune of almost 0.7% or 70 bips. This is surprising. This has come despite the rate cut. Now, the reason for this is that the US economy is doing phenomenally well. The data which came of inflation, it has gone up after coming down from March. Also, the employment data came very strong. So market is feeling that the Fed rate cut of 50 bips and expectation of another 1.5% by 2025 was an aggressive expectation. And that's the reason that FIs have withdrawn the money from emerging markets and are taking back to the US. But I think it has already almost peaking out. Once interest rate stabilizes in US, the foreign investors may again start coming back to the emerging markets. Fourth chart, global investors are de-risking their portfolio. Generally, we have seen is that when we go to the US elections, generally the US election year, October is a very bad month because institutional investors sell equities to book the profit so that they can risk the portfolio, and they sit on cash a lot of times, or they buy US blue chip companies. And that's what is happening. In October, we saw huge selling by FIs. FIs sold 1.14 lakh crores from the Indian markets, and they have taken the money back to US and other places. And notably, if you look at the decision of Warren Buffett, recently Warren Buffett has sold 60% of his shares from the largest holding of Apple. Now he sits on $325 billion of cash, which is 35% of the portfolio. So globally, investors have been de-risking the portfolio before the US elections. And historically, we've also seen that November and December are very strong after the US elections when the uncertainty is gone. So hopefully, we also expect that November and December are going to be very strong months for the market. So it's important to stay invested. Yes, the portfolio returns have not come so much. There has been a volatility, but we are hopeful that after the US elections, November and December are going to be good for the global markets. Last chart. This is an important chart. It shows a 1 month return of major Indian indices like Nifty 50 fell 6.12%. Your broader index Nifty 500 was down 6.35%. Surprisingly, small cap, which was down only 3%, or the small cap 250 was down 3.5%, and micro cap was down only 3%. So yes, the broad market was down 6.5%. Small cap and micro cap did not fall so much. The reason being there was a huge selling of 1.14 lakh crores by FIs, and generally FIs have holdings in large cap. That's why they sell large cap, and large caps have seen a correction. Domestic investors bought 1.07 lakh crore. That's a record, and that's the reason why market did not fall so much. And generally they buy small, mid, and micro, and that's the reason the losses was less in this category. But what I want to highlight to all the investors, if you look at the 1 year return, even after this correction, the returns are very strong. Nifty 500 in last 1 year after October correction has given 36%. If you look at the small cap, the returns are 48% and micro cap is 54%. Yes, there has been a correction, but I think it's a temporary blip. It's a healthy correction to reduce the froth. You are still sitting on a lot of profit from equities. We continue to be bullish, have confidence in equity. It's a short-term volatility. It's a healthy volatility, because when we are riding on a big bull run, these type of corrections happens, and it's always good. So my dear friends, this is what I have in the 5 charts this time. Watch the recording again, follow the charts, and in coming days, these charts are going to impact your portfolio. Align your portfolios. Don't worry about the recent correction. In fact, those who are underinvested in equity, it's a fantastic time to buy because the valuations have become attractive. Large caps are looking far better in terms of valuation than mid and small cap. And the most important thing, invest only that money in equity which has a time horizon of 5 year plus, because the risk is very less. So take your decisions carefully, read the news, read the information, do your analysis, and take the best decisions. Wishing you a lot of profits in the month of November. Thank you.